Happy Friday, everybody.
Morning.
Morning, sir.
How you guys doing?
Good.
So, Mr. Andre, you have any great stories for the week?
Yeah, the Florida Realtors Convention is going on. So I was able to meet several other Remax owners, and they were telling me all the good things that happened at the BLC.
Fantastic.
So,
Wonderful. Yeah, 1 minute. Everybody's today. So, Mr. Frank or any lenders, what are rates doing? I suppose not great, right?
Good morning. I'm sorry, Rob,
Good
I didn't hear you.
morning. I said, what's the rate news for the week? More of the
Well, how
same?
about this? The rates are great. Listen, it's a great time to buy. Rates are up, rates are down, they go up, we can refinance. If they go up and you're locked in, guess what? You got a good rate. Well, to be honest with you, rates are higher because of the bond market, but we're offering a 1 year buy down, and if the rate is 7%, the first year will be 6%, and that'll give you an opportunity to refinance within 12 months. So no cost for it. It's on us, and gives people a time to lock in and take advantage of a low rate for the first 12 months. After that 12 months, it goes back up, but there's no cost for it. So whatever the rate is that they lock into, it's a 1% buy down.
So, here's the good news and the bad news, from my digesting more information than I should. I've been trying to like zone in on some more macroeconomic things that are going on, and I don't know. I must have watched a couple of Jamie Dimon speeches, and now all of a sudden I'm getting all of his posts. And Jamie Dimon's the CEO of Chase Bank for 21 years. Somebody I find to be credible, somebody I find to be balanced. And the bad news is Jamie Dimon is saying, look, those of you who are hoping for the interest rates to fall and fall back dramatically, he says, I think that you're in fantasy land. He predicts that rates are going to be higher based upon everything else that's going on in the world and the economy. And I know our industry is full with hope junkies promising, hey, if only the rates drop another 0.5% or 1%, the buyers will come out of the woodwork. So today's session is designed to kind of cover what if it doesn't happen, what if it probably doesn't happen, and what we should be doing both as participants in the industry, and many of us on this call are leaders that have people that look up to us for advice on what we're doing. So, not to be the negative person in the room, but there's a good possibility, and Frank, you probably could concur with this, that rates might not be going down to 6% again anytime soon, and the world has to continue to turn. People need to continue to buy houses. At some point, rates will go down, but right now the Federal Reserve is in a pickle, right? I mean, Trump wants them to lower the short-term interest rate, which is probably going to do the opposite, right?
Mhm.
If they cut the short-term interest rate, there's going to be inflation fears, and the long-term rates and the mortgage rates will go up. So the government can't control the long end of the interest rates. They can try to manipulate it, but it doesn't usually work. They tried QE, which is putting money into the market, but every time I see that happening, it ultimately crashes. And they've done that with the yen. They've done that with, foreign governments have tried to prop up their currencies only to see them catastrophically fall at some point. So today's topic: market conditions, economic framing, and why the market is where it is. Understanding today's market, how to lead clients through confusion, fear, and opportunity. Now, I use those three words: confusion, fear, and opportunity. They're all together, right? And they're kind of contradictory words. I'm going to go through framing how these conversations should happen. I'm going to talk a little bit about, market conditions, and try to explain it simply that we can tell it to our clients. We're going to talk a little bit about the economic forces shaping today's real estate and interest rate market, consumer psychology and behavior. And please don't log off early, because it's quite interesting when you try to diagnose the consumer. how agents should communicate the market. And I'm going to try to get a little bit of interaction here. And I don't want to offend anybody because there's a lot of smart people here, but I want to just kind of dissect what you might say and maybe give us some alternative conversations. And I want to come up with an agent action plan for the next 90 days and then take a few of your questions. The market isn't broken. It's behaving exactly as the economists predict. Our job is to understand it, explain it, and lead clients through it. Okay, the market isn't broken. It's behaving exactly as it's supposed to. Our job is to understand it, explain it, and lead clients through it, right? I'm looking at Robert down in Gainesville and Bob Durso in Woodbridge. You guys have been around a long time. You've seen the markets come and go, and you've never put an application in to go work at Costco or Walmart, have you?
No,
This is your
no.
career. I mean, this is your career, right? You don't even think twice about it. The market's always changing, and we're not getting out of the market because it's changing. And I do think sometimes it's refreshing to get a different perspective on how to communicate with our clients because sometimes we're too close to the sun and, we're watching things on a micro level. This happens today, this happens tomorrow. Oh, God, the rates are up 3/8 of a point today. It was a disastrous day in the market. Who would ever want to buy a house today? Well, the public doesn't know that, right? It means nothing to them. So when we have conversations with our buyers and sellers, we need to set the tone, right? And how many times, and I'm looking at you, Rob Durst, how many times do your agents come in? They're all panicked, and that's because who's setting the tone? The client,
The client.
right? Not the agent. Check this out. No drama, no fear, no waiting for the market to go back, right? And, I think the first person that we need to convince before we can convince anybody else is kind of ourselves. And, this very well may be the market that we have for the next 24 to 36 months. I'm going to explain to you why that might be. Okay. But it almost doesn't matter because I love the coin toss analogy. And Wilson, you know the coin toss analogy, right? You remember that one, right? With interest rates?
I don't. You're gonna have to hit me
You
with it.
don't. So the coin toss analogy is, Wilson, hey, let me just ask you a question. If you bought today at 6.75, 30-year fixed rate, never going to go higher, and rates went up to 11%, how would you feel?
Great.
Now, Wilson, if you bought now at 6.75 and 9 months from now, rates went down to 5.5, how would you feel?
Fine. Little annoyed.
Wait. You'd actually feel pretty great, Wilson,
Yeah.
because you'd be able to have bought at the lower price and refinance to that rate. That's what I
Yeah.
wanted to explain to you. Because when you explain that to a buyer, Wilson, it gives them the confidence to make that decision. And it's absolutely true. Because, Wilson, if you knew that rates were going to drop 3/4 of a point and you decided to wait, every time the rates drop 0.5%, there's 2 million more buyers that come into the marketplace, and there's only 4 million sales annually. So, Wilson, if there's 2 million more people looking to buy houses and there's only 4 million sales, what do you think that's going to do to prices?
They're gonna go up.
And what do you think that's going to do to the amount of options you have to look at, Wilson? You think you'll have more or less to look at for you and your family?
A lot less.
A lot less. So you kind of follow, Wilson, how I'm saying that if you bought
Yeah.
now and rates dropped, you kind of win. And if you bought now and rates went to 11% and you're at 6.75, you said you'd feel how?
If it went up,
So if you bought now and you locked in for 30 years, 6.75, and rates went up to 11 and you could never get 6.75, how would you feel?
feel great.
You'd feel awesome, right? All right. I just wanted to make sure that we understood each other on how the market works. Now, I don't think we have enough of those conversations. Okay. As a matter of fact, Wilson, you've been through a lot of my masterminds. I've talked to that a bunch of times, but it's not uncommon for us to forget it unless we put it into effect. Does that make sense?
Yep.
So it's all about framing where we are, right? And it's about understanding. I'm going to talk a little bit more about that. But market conditions explained simply. We have a structural inventory shortage going on 20 years. Okay. We overbuilt up to 2008. Then after 2008, we've been underbuilding for population growth. So forget about the interest rates being locked in at under 4%, under 3%, sellers don't want to move. Forget about that. There's just not enough housing units here, so we're going to have tight inventory. Rate lock effect. Does anybody know what percentage of outstanding mortgages are below 4% right now? Anybody want to make a guess? 62% of outstanding mortgages are below 4%. And I want to say it was close to 50% were below 3.5%, maybe a year ago or a year and a half ago. If you've been around the business for a while, especially in New Jersey, we all thought that the baby boomers would be, selling their larger houses and moving to Florida or moving to an active adult community. But what we happen to be seeing is baby boomers are aging in place. They're saying, I want to stay in my home. Okay, that's happening more than everybody predicted. There's institutional ownership, which I know there's a little bit of a pushback against that, but there's still maybe 2 to 3% of homes that are owned by institutions, in addition to the multifamily housing. And then the big problem that we have is zoning restrictions and red tape limiting new supply coming to market, right? Has anybody tried to put an addition on your home or get a building permit for something lately? It's just, it's very, very discouraging. So these are the things that we need to talk to, or we need to know for ourselves, and then we need to be prepared to talk to our clients about it if the need arises. I would say that many buyers, Wilson, with the conversation about what does homeownership mean, asking them about the net worth of a homeowner, talking to them about those benefits, plus just the old flip of the coin. Hey, Wilson, if rates went to 11 and you were locked in at 6.75, how would you feel? Right? Most agents do the opposite. They say, hey, Mr. Durso, if you locked in now at 6.75 and rates went to 11, you'd feel great. And you might think that that's the same thing, but it's not. Okay, you need to ask the question so that they come back and validate it with you. And then with the rate drop, Wilson, you're a great student for me. You said, oh, I kind of feel bummed out because I got 6.75. The rates went down to, whatever, 5.5. But every buyer should be relishing the fact that if rates drop, they win, right? Because not only do I say that you refinance, but I have to then back that up, Wilson, with, hey, if you were to wait it for the rates to drop, every 0.5%, NAR says that there's going to be 2 million more buyers in the market. And in a market where there's only 4 million sales, Angie, how do you think that's going to affect your choices of properties that you can see? Is that going to make it better or worse? And you think you're going to have to pay more or less? You need to specifically ask that question to every buyer. All right. Inventory isn't low because of the moment. It's low because of the last 15, 20 years of underbuilding. Okay, so interest rate changes, I don't believe are going to significantly move the inventory back to where it was. It's a very sticky problem that we have. The only thing that might move inventory would be some sort of a catastrophic economic event where buyers are kind of backing out and sellers are desperate to sell, which nobody hopes for that. What agents and clients mostly misunderstand is inventory will stay tight even as rates drop. So inventory is going to stay tight because you're going to get more buyers, right, when rates drop. And hopefully it will unlock some sellers, but inventory still is tight. Prices are sticky. Even if there's some, more balance between buyers and sellers, do you think that lumber and all the material costs to construct a home are going to be going down? I probably don't think so. I think that inflation, that increased cost is here to stay. Buyers will compete for fewer homes, and when inventory remains tight, some sellers hesitate to list because they're like, where am I going to move? The economics that are shaping today's market, the Fed, who knows what the mission of the Fed is? And you have to not be named Frank Delpeche. What's the mission of the Fed?
Maintain inflation to the desired level and watch employment.
Right. So it's got a dual mandate. It wants to have full employment and a target inflation level. So, Bill, kudos to you. That's a perfect answer. And those things conflict with each other at many times. Okay, like if they want to control inflation, they raise rates, which increases unemployment. So they have to try to walk that line and balance that. Number two is housing inflation remains sticky. Number three is rates are likely to stay in the 5.75% to 7.5% range for the foreseeable future, which is nothing exciting when people remember rates being in the twos and threes and fours. Competition for capital with stock. Okay. I don't, the economy has been up and down, but your 401k is probably doing fairly well, right? Stocks are on a unprecedented bull run. This run up in stocks is taking money away from the bond market and the mortgage market, causing rates to creep slightly higher. Excessive government debt. Okay. I'm not sure what the percentage is, but there's a significant percentage of all the revenue that the government takes, which is just interest, paying interest on the debt that we have. When interest rates were low, the government's debt obligation was very, very minimal. Now it's kind of tripled, right? Plus the debt is building even higher. So all of this debt that the government has is competing for capital that could otherwise be allocated to lend on mortgages at lower rates. So now investors can demand a higher rate. And the resurgence of inflation. If you've taken a visit to the gas station, you'll see that oil prices continue to be frustratingly high. And bond market volatility keeps mortgage rates unstable. The spread on the bond market, the mortgage market, is higher than it's historically been. And Frank, the 10-year is like 4.5 now, 4.40, something like that.
10 years at 473 right now.
4.7. And what's the 30-year? Is it closer to 7 now, or?
Yeah, actually, yeah, it is. It's actually some depending upon the credit score, some interest rates for the 30-year they're over 7%. So it just depends on credit score.
So you're roughly 225 basis points. I remember,
Yep.
going back to the pandemic and pre-pandemic, it might have been as low as 150.
Mm-hmm.
So you've got a 3/4 of a point increase in the structural interest rate on mortgage-backed securities, which is what controls the rates that our clients get. So,
I mean, Rob, over the last 55 years, the average rate was like 7.3%. So, I mean, they're falling within the average over the last 55 years.
yeah. And you got to stop, like you have to have your full arsenal, and we have to stop shortcutting it and stop accepting Zillow's definition of what we do, which is open doors. Right? Zillow would like us to be extinct. Some of these companies would like to automate us out of our jobs. But this is a very personal business, and it's about communication. It's about making people feel comfortable to take action. Okay, it's always been about that, but sometimes we lose sight of that. And Frank, us doing shop talk here about rates historically being well within the range, right? I remember, when I was just a youngster, rates were in the 13 to 17% for mortgages. Thank goodness we're not there. So, relatively speaking, it's kind of where the market is, and I don't think it's going back to 4. And our behavior has a tremendous influence on what our clients and the people who are yet to be our clients, what they do and how they behave. Affordability crisis. Now, here's where you can tell that this is a buzzword, because still the last 3 election cycles have all been about affordability. Okay, that's the buzzword from both sides of the aisle. That's the kitchen table topic, right? Everybody's saying, hey, what about affordability? Property taxes going up, interest rates going up, home insurance going up, right? All this is reducing my purchasing power. So prices are elevated and will continue to be elevated due to supply shortages. Rates reduce purchasing power by 10 to 35%. I remember back in the day of low interest rates, we used to be, oh, rates went down 3/4 of a point. Now you can buy 10% more. And of course, everybody bought 15% more. They bid the prices up. So now rates are impairing our clients' buying ability. Insurance costs, especially in coastal environments with higher risks, are still not ideal. For some of our Florida team, how's the insurance market doing for us there?
I think numbers are a little bit lower of late. I had some rental houses, and when I renewed policies, I was able to bring them down over a year ago. I think as much as 300 to 450, 500 in some cases, depending on location. So, and I had just heard that actually a week or two before, one of the politicians was talking about how the homeowner policies have come down more. Insurers have come into the state again, but I mean, obviously, who knows what happens before hurricane season finishes up and whether they're going to stay high again, if you know what I mean.
Yeah. Now, yeah, everybody knows that there's two types of debt. Well, I hope you do. There's good debt and bad debt. And what would be an example of a bad debt for a consumer to have?
Credit cards.
Credit card. And what would be an example of a good debt?
Your
Mortgage
mortgage.
the home.
Your
Mortgage.
mortgage, right? Because you're securing it by an improving asset. Governments across the planet now are almost all approaching having a debt equal to their gross domestic product, which is frightening. So, for example, if you look at an average citizen in your market or an average couple, a household that are buying properties, maybe their income is $100,000 to $125,000. A teacher and a firefighter, maybe it's 150, 175, whatever that number is. If they had $175,000 in credit card debt, would you think they were financially well and healthy? Right, because they have nothing to back that up. So governments across the planet are approaching or exceeding a debt level that equals their gross domestic product. That means everybody would have to work for an entire year and not eat in order to pay down the debt. That doesn't seem to make sense to me, right? So that's bad debt. But that's going to put pressure on interest rates, and eventually something's going to have to give, in my opinion. Consumer psychology and behavior. This is where our job really becomes interesting, because they don't teach this in real estate school, do they? They just they just teach you how to stay out of trouble. So what's the buyer psychology? Tell me what are you seeing your buyers? Where's their head at today?
A lot of them are very discouraged.
And why so?
They've been looking for a long time. They've been beat out on offers. Some of that, like what I've experienced recently, is I've been showing homes, and quite frankly, the quality of the home is it's very disappointing.
And I think we talked about this maybe last week, 2 or 3 weeks ago. I'm sure we've all had a client that we've worked with as a buyer. They lost the property, and then 3 months later, you run into them. They're still looking for a house, and they say to you, "Hey, Bobby, if I would have only known that I could have got that for 15,000 more, man, I would have loved to have made that choice." Right? When they find out what the property had sold for, and that's probably not completely true, because they probably at the moment wouldn't have done it, but after the fact, it's easy for them to say that. But I think clients have a fear of overpaying. Would you all agree?
It's either a fear of overpaying, or their support group, or their parents basically tell them that they're overpaying.
So if somebody came and said, "Hey, my realtor friend in North Carolina said they think I'm overpaying for this," like, how do you answer that question?
Well, I point out the fact that North Carolina is a lot different than New Jersey. I always, well, I should say always, but a lot of times you find out people that are offering advice don't even own a home.
Yeah.
So it's kind of the Chicken Little story. It's just if enough people say it, you're going to believe it.
And Bobby, in this industry now, you have to be an AI expert, you have to be a social media guru, you have to be a technology expert, and now I'm telling you, you need to be a psychology and a communications expert. And one of the things that I would suggest that we put into our arsenal or an extra tool is, hey, Bobby, I think we're really overpaying for this property. It really concerns me, right? I don't want to go another 10,000. And here's a really interesting question that you could ask. Hey, Trish, you feel like you're overpaying relative to what? Like, what are you comparing it to, right? And sometimes the way that we respond makes them have a different perspective on it, right? And most of the time, if you say, hey, look at maybe it's not the house, maybe it's just not you're not ready to buy right now, or
Rob,
maybe you haven't fully digested what this
can
means.
can I throw something in on that, Rob?
Absolutely.
There was a seminar, I think 3 or 4 days ago that I caught the end of it, and a speaker was basically talking mostly about dealing with buyers, and he offered three big points. Number one was the building rapport, number one, which is not on our topic. The other one was education, which was pretty much, hey, this is how we do the business. If you want to buy this house, dun 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 dun, these are the steps. But and again, I'm sure most of us get one and two very quickly. But the one that I used to do all the time, but I've kind of forgotten about over the last several years, was to discuss the building wealth part of the formula, which and one of the things that he had been using with his buyers was one of these tools where, and again, maybe the mortgage company guy, maybe Frank has one of these where you can plug in some numbers and say, hey, this house at this interest rate with this payment at a 3, 4% appreciation rate down the road, this is what you're looking at in 4 years, 5 years. So, I mean, in addition to not only, hey, we're buying now and we're getting all the benefits of home ownership and, with taxes and all the other benefits affiliated with it, he was showing the fact that, if you had an $80,000 deposit and you didn't put it on the down payment, but you stuck in the stock market, I mean, obviously over 5 years you would make some money, but it would be far, far less. And I think the example he used was something like 6 times more return on the investment as opposed to just putting that money in and then the other part of the formula, he was, hey, you're going to have memories here. The kids are going to, set up the Christmas tree in that corner, one of those. But anyway, I thought it was a good point for me to say, hey, you've been missing this topic. You really need to get back into this, telling people, I mean, I own rental houses and I'm sure a lot of us do, but we need to preach, what's out there, if you know what I mean.
Yeah, and Robert, one of the things I might even say that we can use to kind of put a cherry on that ice cream sundae you talked about is, are you primarily looking to buy a new house to enhance your wealth or to have a much more comfortable, living lifestyle, right? Because those are two distinct things, but they both go hand in hand, right? So sometimes we forget things that got us where we were because things get to be easy for time. Like great markets create bad habits, right? Because you can be successful without having the good habits that got you to be successful in the normal market, right? And normalizing or challenging markets require good habits in order to have consistency. And those good habits are you're asking the same questions, not letting the customer run us around and spin us around, right? Zillow and we still, I realize that Zillow does have a place in the business in our industry, but I'm hoping that it's a smaller and smaller piece of the industry because if we all control the people that we know, then Zillow really doesn't have a whole lot of leverage, right?
At least that's the hope. Only I've had encountered many people who just go straight to Zillow. Well, Zillow told me the house is only worth this much. So why are you telling me the house, I'm trying to buy a house and it's this much? So explain to me why this is their price, but Zillow says this. So I think I should be paying Zillow's price.
Right. Well, I mean, have you ever gone on and looked at it and say, Zillow itself admits that it has a 19.4% uh, price range of accuracy. So, with a 19.4, and sometimes it's over 30%, that Zillow will say, hey, we believe that we're within 30% of the price. Now, in a $600,000 house, that's a big swing, right? But if the customer just reads the headline and says, hey, it's worth 600, well, it could be worth 780 or it could be worth, 460. Most of my clients, that's why they hire me. And that's why I charge a 3.5% or a 3% buyer agency fee, right? You can turn their words into a selling opportunity. And if they're belligerent or they don't really want to engage, then thank goodness you learned that that's somebody that you really don't want to spend a lot of time. You don't want to spend 3 Saturdays showing them properties and have them buy with their cousin or never buy, right?
Definitely. I mean, I do tell them Zillow is not accurate, and then I'll give them a brief CMA so they can see this is exactly kind of where they're at. So if they're in the ballpark, I'll let them know, yeah, they've got some negotiating room that we can possibly bring it down slightly, but it's not going to go down to Zillow's price.
And I'm doing something for your benefit here, Tiffany. I want to and everybody can also benefit from this. Just seeing if I could pull it up real quick. Where is this number?
Rob, while you're looking that up, can I just chime in on the Zillow thing?
Yep.
All right. So this has been working for me pretty successfully very recently. So I'm not saying it's going to work forever, but I seem to be pretty hot on this. So whenever this estimate ever comes up, I may look at a seller or a buyer and I say, let me ask you a question. When do you think Zillow was here? And blank stare. Nobody has an answer. They say, well, I don't know. And then I'd say the reality is Zillow has never been in this house. So if I'm looking at a homeowner, I would say, for you to think that Zillow is accurate, here's why they're not. And if you ever take the step of looking at some of the comparables, I could scrutinize every one of those comparables to explain to a homeowner why it's not accurate, which affects this estimate. But when I'm speaking with the buyer and they're saying to me, well, I should pay Zillow's price because it's lower, I point out the fact that Zillow has never been there, never saw the upgrades, never saw the amenities or the proximity to the park or the schools or anything like that. And just like Tiffany said, you give them the market analysis and say, Zillow has an opinion, but they've never been in the house. We've been in the house. I know the market. I know the area. Here's the comparables that justify what they're asking. So when you point out that Zillow has never been in the house, right now, for me, it just shuts them right down.
And I would even bring it to a client's attention, and I would say, and you could probably even look this up, but if you take a house that has a Zestimate of 600 and you put it on the market for 900, I'll bet you that Zestimate goes up 150,000 just by putting it on the market at a higher price, right? And the converse is that if you take that home and you price it slightly below market to do it auction style, it might actually lower this estimate, but that house is actually going to sell for more, right? But I'll bet you consumers don't know that agents and list prices influence this estimate of the home as much as it does, right? And there's examples of, I think Spencer Raskoff, his home, the former CEO of Zillow, his home sold for like 40% below this estimate. Okay, and you can Google that and you can have that in your arsenal. And Tiffany, the stakes are high when people are saying that, right? And they feel really empowered. And I think it's our job not to manipulate them, but to balance the story, like give both sides to it, right? And I think it was Bobby that was saying, he likes to ask them questions. And I find like if you tell them Zestimates aren't always accurate, versus, hey, are you aware that estimates can be manipulated by homeowners and agents? By the way, are you aware that the former CEO of Zillow sold his house for 40% less than his estimate? Right, and these are just talking points
Mhm.
to get you leverage and prevent clients from operating out of fear, which is what they often do. Let me just wrap this up. I always go down these rabbit holes here. So here's the buyer psychology. It's fear of overpaying, confusion from information, media analysis, paralysis, and desire to buy, but basically a lack of uh, openness to pay a market price, right? Everybody always wants to try to get the deal. Oh, I want to try to find the needle in the haystack. I want to get a deal on a property. Seller philosophy, fear of losing their low rate. It's going to happen. Unrealistic price expectations. And I wouldn't go around saying this, but this is the mindset that I have is sellers are emotionally connected to their homes. If you've been on listing appointments, you know that that's the truth. You don't want to be offending sellers, but you have to be honest with them, right? And a seller is like a mother at the maternity ward. Everyone's got the cutest baby. Every seller's got the best house. Okay, they all can't be true. Hesitation to list unless they have to or they must get, right? And if they have this false image or false opinion of the value, then over time it becomes anchored and like, hey, Mr. Durso, I'm not going to sell unless I get 800 for my 650 house, right? Because I've been telling myself that for a year and a half. Consumers aren't irrational; they're overwhelmed. Your clarity, your communication becomes their confidence. All right. Consumers aren't irrational. We like to say they're irrational. They're more overwhelmed. And if you think about it, you can kind of come around to that because prices continue to go up. When are prices going to come down, Tiffany? I've been waiting forever. Like it's just rates are going up, prices are going up. I feel like I can't win. So
Yeah,
that's
everything's
where
going up, so that is an argument.
right, but that's where we need to be. We need to be the stable influence in an otherwise irrational process, right? So consumers aren't irrational like we say they are. They're overwhelmed. They need clarity, and your clarity becomes their confidence. How agents should communicate the market. I don't want to ask what you're saying, but here's a couple of things. The market is still and remains tight because we don't have enough homes. Rates are still higher than they were a year or two ago, and buyers want to buy, but many can't afford what they want. Sellers don't want to move because they don't want to lose their rates. That's why prices and inventory both stay. That's why prices stay high and inventory stays low. What agents must stop saying? What agents must stop saying? Oh, I think the rates will drop soon, right? They got to come down eventually. Probably, yes, eventually everything goes up and down, but I don't think that's productive to giving clients the right information to make the choice for themselves. The market's about to shift. Nobody knows the market's going to shift, and we're waiting for things to normalize. These are things that a recent study I heard a lot of agents saying that are really counterproductive to what we're looking to do. What we should be saying instead, this is the market. Let's build a custom strategy that works now. This is the market. Let's build a custom strategy that works now. Tony, would you be interested in hearing how we navigate these low inventory markets?
Sure, I'd love to.
There you go. So you ask the questions that get engagement. Here's how we structure offers in a high rate environment, right? So you give them information on how you're doing things to offset what their fear is. So here's I want to leave you with like a little action plan for the next 30 to 90 days. For buyers, and this, I think we have a gold mine out there because if we all look back at the people that were looking when interest rates were low, that they just disappeared. right? Many of them didn't buy because it was just a math problem. There wasn't enough homes. Is reach back out to them, right? Eventually, they're going to come to the conclusion that, hey, we're not going to get a 4% rate again. I do need shelter. I wish I would have overpaid in 2021 because that would have been a great deal today because prices continue to go up. Frank hit the nail on the head. It's almost like you saw my sheet in advance. The rate buy down strategy, right? That's kind of a win-win, especially for a novice buyer. Hey, how would you feel if you're able to buy now with that 5.75% rate for the first year, and if rates came down, you could refinance, and if rates went up to 15, you'd be locked in at no higher than 6.75%. How would you feel about that?
I feel
Right? When you
great.
ask the when you ask the question, it almost seems like it would be ridiculous for them to say anything else, correct? But if we try using the technique of saying that, over the past 40 years, 7% is not that bad, like that's probably not as well received as asking it the way we did previously. Use payment-based searches, right? Instead of price, right? Talk about payment, talk about after-tax payment, target stale listings. Has anybody ever got a really good deal on a listing that's been ignored by the market, even in a hot market? Like they started at a ridiculous price, and then when they hit the right price, it still was ignored, and you were able to get a really good deal. I probably come across, at least a dozen of them every year where some agent's like, Rob, I can't believe this. Market's so hot, but everybody forgot about this one.
Yeah, I just did for my buyers.
Yeah, I mean, it's a great secret, isn't it?
Yes.
Action for sellers. Educate them on, rate lock psychology. If you're in a market where you need to do this, seller concessions to buy down the rate makes it more attractive, even though everybody can do it. Your novice or first or second time buyer is not aware that that sellers have the ability to buy the rates down. Explain to them that we price based on local comps, not national headlines. Talk about how you're going to protect them during a home inspection and what the strategy is for that. Who has that conversation up front with your sellers? Nobody? Everybody's shy? Trish, did you have a comment?
I do. Absolutely. It's something that's part of your initial meeting and have that discussion with them. But I try to encourage my clients to put on a seller home warranty as well as fix the things that they know are going to be an issue before we put it on the market.
Yep. I mean, usually, the best way to get out of a home inspection issue is to not get into one. And the best way to do that is to try to know what you're dealing with up front, right? Because if you're getting your house ready to go on the market, it's much easier to identify a contractor, get it done at a reasonable time frame than, try to rush and get it done to meet a buyer's deadline, or you have to get it done yesterday, or have the buyer say it costs 4 times more than it does to fix it. Some tips, and even if you're not a what would you call it, like a hyper local expert, we should be talking candidly to our clients and future clients about what's going on in the market on video. It's still, to this day, it's one of the most underutilized resources that we have. Doing a regular communication with your clients at the same time every month or every week is really valuable. Like, I don't know how many of you on today's call just log on at 11 o'clock on Fridays versus you look at the topic and you see if you're going to come on. Who just logs on Fridays because it's 11 o'clock? And who reads the topic before they log on? So we have probably 7 or 8 to 2. Now, if
So,
you
Rob,
send out,
I just want to say that I do both of those because I want to see what the topic's going to be and hear what you have to say about it so that I can be prepared for the conversation that's going to develop on Friday morning at 11.
No, I mean that, but you're probably one of the most loyalist followers here. You're almost a co-host there, Mr. Garber. So thank you for always being prepared and sharing. One of the things, and I wasn't at the broker owner event, but I heard from many of my peers is if I imagine most of us know who Brian Buffini is, right? So at the broker owner conference, he was like, look, just, we're going through a transition, we're going through a merger, there's going to be changes. But he put up on the big screen, he's like, here's Remax, and here's all the competition production per agent. He's like, if you're an agent, that's what matters to you is how much business are you doing and how much business are your peers doing. And he's like, I don't even care if I get fired. He's like, Remax agents do 11.3, real agents do 2.4. He's like, you should be proud of what you're doing at Remax. You should, build upon your career and not let the noise get in the way, right? And that's part of the psychology of our business, right? Is not letting the noise get into our head. And just like, a lot of times it's not convenient to do the Friday mastermind because something's going on. And, I try my darndest to make sure I can do it. And I think that it's rewarding to see that people, tune in and listen to it. And many of you feel value from it and should give me positive feedback. So if you can take that and, every Wednesday at 10 a.m., whatever the time is that you're going to do it, send out a meaningful email to your database. Maybe you have 300, maybe you have 3,000. But all it takes is, 6 to 18 of them a year to open those emails that don't cost you anything extra and then come back to you and say, you know what, I've been reading what you've been putting out there about the market. Now is the right time for my kid, for me, whatever, to make my move. So please try to take something away from this event and implement it right away. I just have to clean up this here. It was recording on my document.
Rob, can I ask you something?
Absolutely.
Sure. Okay. I actually have a new agent coming to my team. Will be okay if I can forward to him the link on Monday and Friday?
Absolutely. And you know what, Karma, you can even give it to your friends at the competition because you know what, good ideas aren't they're not to be kept in secret, right?
Absolutely.
And,
Hey,
and how
Rob,
many
I'm
how,
sorry,
and
I'm
how
going to
many
interrupt
yeah,
for 1 second. The Monday call is specifically just for team leaders, and I want to make sure we respect the team leaders because that's the day we use to help team leaders help their agents. So I think we wouldn't want the team members to be joining those team calls, but the Friday mastermind, absolutely. And Karma, you're in New Jersey, so they can also join the Tuesday mastermind.
Okay, so I would not give it to him for Monday.
No, Monday is just for team leaders.
Right. Okay. No issue.
Yes, thank you. Sorry, go ahead, Rob.
yeah. And Donna, I mean, Karma, one of the things that I've seen team leaders experience and I've experienced is, when you bring somebody new on or you bring somebody that's been in the business that's been underperforming, and then you kind of take them under your wing and you teach them, it really sharpens your skill. So you might say I'm helping them out, but you're really helping yourself out. And I'm going to go on record saying that because when you help somebody, it sharpens your skills and you both win.
I agree 100%.
Hey, Rob, if I could just, I had a conversation with Adona yesterday, or whenever that our meeting was. I guess that was yesterday. And it really surprised me, but it's so true because of the Remax brand. And if she wouldn't mind telling the story about how when she was thinking of joining Remax, what was going through her mind, because I think we all can take a lot away from this because we see Adona and she's fabulous, and yet these were her emotions when she was getting ready to interview for Remax.
So Robert, before we turn it over to Adona, I just want to say that yes, I agree, but also it's a lot of hard work. It's, working late in the evening at times. It's working early in, like, so doing the things that you need to do to be successful. Being well spoken and smart doesn't get you there. You need to pull everything together, and you need to leverage your network. And don't go ahead and tell your story, but I just want people to know that, behind the facade of success is a lot of hard work.
Well, yes, Robert, thank you for putting me on the spot. Well, what I shared with my agents yesterday at our meeting was that I first started off at a boutique firm because of course, they gave me the highest commission split as a new agent, but no support. So when I realized that I needed the broker support, I was interviewing with brokers, but I didn't even consider Remax because I thought I wasn't good enough to even have a meeting with Remax. And I told Robert that it took me a long time. I went to another brokerage just to get the experience so that I can qualify to be a Remax agent. One thing I mentioned to our agents is that I want our company to be just that people are going to work really hard to even be considered to come and work here, just because the value that we have and the agents that work here are I have the utmost respect. We are well qualified, experts, seasoned, and I want to make sure Remax is not going to be one of those brands we'll just take anybody. It's going to be that, they're going to have to be experienced and have that outlook like, am I even good enough to join Remax? So if I'm sitting down with an agent, they're the ones who are going to try and convince me why they're good enough to be here. So that's something I shared with the team yesterday.
And I think, Adona, you're also a perfect example of when you help people, it elevates your skill and confidence and everything else, right? Because in the 4+ years or so you've been here, you probably have seen a lot of stuff you never thought you'd ever see in real estate, and you figured out a way to get through it, right?
That's correct.
So the last thing I'm gonna leave off with is I'm gonna give you a quote, and then I'm gonna give you something to think about. The agents who win in this market are the ones who can explain it the best. Clarity is your competitive advantage. Clarity is your competitive advantage. And Donna and I are always looking at, what did we do 10 years ago? What do we do 5 years ago? What do we do now? And sometimes there are things we did 10 years ago that we just continue doing because we've always done them. And I'm going to encourage everybody to think about what 3 things you must stop doing in order to be able to do 3 additional things in your business. Okay. And if you make that commitment, you need to start doing it consistently, right? With passion. Like, I guarantee you there are 3 expenses that you can get rid of that won't impact your business. I guarantee you there are 3 processes or things that you're doing every month that you can get rid of that will provide you with more time. And I guarantee you there are 3 things that you can serve your clients better if you do them consistently and you commit to doing that sooner rather than later. So there's a series of 3s. Think about 3 things that you do regularly that you shouldn't be doing. And for me, like, one of the things that drives me mad is a lot of times I have to keep changing the passwords on my different things I log into, and I just think, how much time do I waste by going to my Google sheet and looking up the latest version of what that password is? And I got to find a better solution for just that stupid little thing. And I guarantee if we look around, there are at least 3 things that we can stop doing. And there are 3 things we can replace that with that will add more value to our life, to our clients, to our business. All right. And let's try to do that by next week. Not that I'm going to check in on you, but if you don't have a deadline, you don't do it. All right. So anybody have any last questions before we wrap up? I can't, like, when we do these, Robert, an hour goes by like nothing.
You're right.
I have a quick question. Are you going to be setting something up to share from your broker owner meetings? for us to be able to understand a bit more? Because of course, all over social media, there's lots of stuff. I think it would be hugely beneficial.
Yes. There's a couple of things we're waiting for them to I guess come to a head, which is and you have some Canadian ties. I understand the Canadian bureaucracy is holding this up for at least another 2 to 3 weeks.
Okay.
And reviewing it for competitive nature, So I think Tamir had spoken to Adona and said it might be another 2 to 3 weeks before it's able to close.
Okay.
And we want to get you accurate information than just give you the speculative information that's out there, because God knows there is so much speculative information out there in the marketplace.
Absolutely.
And there probably will be some things, Trish, that we're not going to love about it. There's probably going to be some things that we didn't expect that are going to be tremendous gifts to us. And I think the decision of whether it's good or bad is on what we focus on, and how open-minded we are to changing our business. Because our business is changing regardless of whether or not there's a merger or not. The business changes constantly. So I applaud them for making a very bold decision. Adona, myself, Andre, everybody in leadership is going to be an advocate to make sure that we get our unfair share of the additional benefit, and we get that information to you so that you can take actionable steps to exploit it in a good way.
Excellent. Thank you.
Rob,
All right. Well,
send the 90 days action plan.
what's that?
The action plan for 90 days.
Yeah. So I just talked about like we need to think about 5 actions for buyers, 5 actions for sellers, and 5 actions for us. So for buyers, it might be like the check-ins, talk to them about rate buy downs, things that you do like expanding search criteria, if they really want to buy a house, target stale listings, and use payment-based instead of price-based buying power, like the auto industry does. Like, you can be in this new car for under $400 a month, right? They don't tell you that it's $57,000 and that you're leasing it, and if you over they just sell it on the payment side. For sellers, educate them on the fact that they're probably not going to be able to buy another house with a 3.5% mortgage anytime soon. So you have to talk about the rate lock psychology, show the math with move up leverage, show them how sellers' concessions, as opposed to cutting price, can ultimately attract more buyers. These are things we all did earlier on in our careers. I know Karma, going back 20 plus years, we were doing this, buy downs and, offering to pay towards their closing costs to get a bigger buyer pool. Price based on local comps, not national headlines. We talked about the pre-inspection. Okay. And then for the agents, the weekly market update video, state of the market email on a regular basis, a CMA a day challenge, find 3 things that you're doing that you shouldn't be doing. Find 3 new things that you can substitute for that period of time and do them consistently. So these are things that, there's no rocket science here, Karma. It's just a matter of, doing things consistently, reaching out to some of your peers that are on these calls that are taking the same time to invest in themselves and saying, hey, I like what Bobby Golden has to say, pick his brain, or talk to Brian in Arizona, or Tony in Florida. These are all great agents with different perspectives, and find whatever works for you.
Thank you.
All right. So the market doesn't control our fate. What's between our ears controls our fate. And we have a lot of people that we can help, and we should have a moral obligation to help them in good and bad markets.
Yep.
Everybody have a great weekend. I'll see you all next week.
Thank you.
Bye.
Rob.
Thank you.